First-time home buyers in Oregon have access to an awesome tax deduction that is not widely known, and therefore I guarantee it's not being taken advantage of as much as it should. In today's video, I'm going to walk you through Oregon's first-time home buyer savings account and explain the details and who can benefit. Under this law, individuals or joint filers who save money to buy a home in the future can deduct up to $5,000 off their Oregon state income tax return. And for joint filers, it's $10,000 per year. And once the money's inside that account, the future interest earnings is not taxed on the Oregon state income tax return. Now, there's actually no limit on how much money that person can put into the designated account. There's only a limit on how much the deduction is. Now, how does this work? Well, a first-time home buyer would need to open a designated first-time home buyer savings account. I would advise they call their bank or credit union and ask if they offer these accounts. If not, a simple Google search will show banks in the area that will. Now, there are time limits that are important here. The account, the designated first-time homebuyer account, has to be open prior to December of 2026. And once the money's the account's open and the money's in there, it has to be used within 10 years to actually buy a home. And there's no minimum amount of time that the money sits inside that designated account. In other words, if you're a first-time home buyer out there that is currently saving to buy a home, you can still go open up a designated first-time home buyer account and simply transfer the money in your existing account into that for the tax deduction. Now, once used, the funds have to be used either for a down payment or qualifying closing costs, which are defined as title insurance escrow, appraisal inspections, loan origination fees, or real estate commissions. Now, who qualifies? A first-time home buyer is defined as anyone who has not owned a home in the previous 3 years. So you don't even have to be a first-time home buyer to be a qualified first-time home buyer. You must be a resident of Oregon. And what's cool is other people can actually contribute into your savings account if you're that first-time home buyer. So maybe you have a generous family member, maybe you're getting married. This is a great way to allow others to help you contribute to the goal of home ownership. But the deduction for the first-time home buyer is limited to the amount of money that they put into that designated account. Now, there are income thresholds for this tax deduction. For a single filer, their maximum federal AGI cannot be over $104,000. AGI stands for adjusted gross income. Now, the deduction begins to phase out between an AGI of $104,000 and $131,000. If you're a single filer and your federal adjusted gross income is over $131,000, well, sorry, you don't qualify for this. For joint filers, the maximum deduction ends at $149,000. For federal AGI, it phases out between $149,000 and $187,000. And if your federal adjusted gross income on your joint tax return is over $187,000, well, sorry, you don't qualify. Now, when you buy a home, the home must be located in Oregon, and the home can be either a single-family residence, a condominium, a townhome, manufactured home, or even a trailer. So there's lots of opportunities here for people. Now, if you have questions, you can go to the Oregon Department of Revenue and just Google this, and there's plenty of good information there, or simply reach out to me. I would love to be a resource for you to help you determine how to take advantage of this program. Thank you so much.